Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I have two paper money trades for you today on two high-profile names. We'll look at Nvidia that has news out today, and we'll look at Boeing coming off their earnings report with two upgrades today. Two stocks going in two different directions. We'll look at two paper money trades. So let's get to our first one, and that is Nvidia. The news out today: Huawei developing and testing an AI chip that they think will compete with Nvidia. That's got the stock down a little over 2%, about 2.2%. We're looking at a strategy. It's a complex strategy in Nvidia. If you watch Fast Market and you watch this, you've seen it before. It's the short put vertical plus the long call calendar in Nvidia. Now, it's a bullish position, but one thing this does, it turns profitable if Nvidia just stays right here, and I'll show you why. First thing we do is we sell this week's May 2nd 105-100 put vertical. So you're selling a put vertical using that credit that you would take in to buy the May 9th and sell the May 2nd 115 call calendar. So selling the put vertical to buy the call calendar. And if you do that, right now it's trading about between a nickel and a dime credit. I put it in for even because it was moving back and forth, but right now it's trading almost a 10-cent credit. So you would actually be buying the calendar spread for less than you're selling the put vertical. That is collecting theta, but is a bullish trade looking for a move up towards $115 in Nvidia. But if you don't get that move, as long as it doesn't breach the 105 level, selling the put vertical is a neutral to bullish strategy. Buying the call calendar is a bullish strategy. So doing this for even, or in this case, any type of a credit, would insulate you from any losses on the upside of that debit. So this one is the risk defined on this. It's the width of that $5 put vertical. That's the definition there. The margin is about $500. That's the width of that put vertical. And like I said, you're looking for a move. The target is about the 115 strike. So a neutral to bullish strategy in Nvidia, looking for a recovery to the upside here towards $115. Now, let's get to our second trade of the day, and that is Boeing. Now, Boeing had earnings last week that the overall street liked. It's rallying, and today it had upgrades from Jefferies, raised their price target from 220 to 230, maintained a buy rating. An upgrade from Bernstein, raised it from outperform from market perform, raised the price target from 181 to 218. So what we're looking for there is just a continuation of what we've been looking at in Boeing before, which is the call diagonal. Buying the May 16th 180 call, which is slightly in the money now. It was at the money when I looked at this originally. Buying the 180 call, selling this week's, looking at that expected move of about $7, the 187.5 strike. So buying the 180, selling this week's 187.5, a 2-week call diagonal in Boeing. It was trading about 575. Now it's trading about 615 on that trade. So this is one that targets that 87.5 strike. It's collecting theta. The risk on the trade is the debit paid. So two different bullish trades, one moderately bullish where if nothing happens, you're still profitable, and the other one a call diagonal in Boeing. The risk on the Nvidia trade is $500, the width of that downside put vertical, and the risk on the Boeing trade is the debit paid. That's our show for today, everyone. We'll see you tomorrow morning with another edition of Daily Trader. I'm Kevin Hincks.